Hello, today we're going to talk about movie production and how to cost that. It's really exciting times, and we're just going to go with you know who, one of the biggest and the best producers of movies in Nigeria. I mean, she takes top three positions of the most commercially successful movies, and no other person than the awesome and professional Funke Akindele. Hey, before you hold me to anything you're gonna see here today, the only fact that I know is the amount that was sold. Everything we're gonna use for this example is gonna be a case study based on assumptions. I repeat, all on assumptions. And before we get into that, do not forget a new movie, Everybody Loves Jennifer, comes out in December 13th. Go watch it. Let's get right into it. Movie production, right? Now, let's talk about this. First and foremost, before we get into this costing, let's take a look at the typical format of an income statement. Okay. So first you have your sales or resume or revenue, right? Let's put that there. Then you have your cost of sales. In this instance, we can replace that with cost of production. Okay, that's the cost of producing the movie, right? That will be subtracted from the revenue. And then here, once that is done, you get your gross profit, right? Gross profit. Okay. Now, once you get your gross profit here, everything that follows after that will be the expenses. Now, when we talk about the expenses, that includes, you know, biggest one, marketing, right? Costs, distribution costs. So, we are talking about, maybe Film One or Cinemax or, all those agencies that help to distribute. Then typically, marketing includes all the advertising. If you want to separate, you can put merchandise, right? Merchandising. What else can we think of? Let's keep it at that. And then let's just underline here and say net profit. Okay. So do not forget, when we started this, I said we are going to use the biggest movie as an example, which is what? A Tribe Called Judah, right? Let's just say Tribe Called Judah, right? Tribe Called Judah. So let's take that as an example. The only thing we know that is a fact that's in a public space is the revenue, and we're just gonna, use a round figure, 1.4 billion, right? 1.4 billion. 1, 2, 3, 1, 2, 3. Right. Good. So now that we're here, let's talk about the cost of production. Again, I am just throwing numbers in the air. These are assumptions just for this example to make sense and be relatable. So please do not hold me. I have no privy information into the actual books. That's a private company, I guess. I do not know, but it's not in the public domain. So let's assume cost of production. Let's do something on this side. Let's say, paying of actors and all the actresses. Let's say those cost 100 million, right? Just throwing that out there. 100 million. Let's say post production, right? Post production, that is all the editing, subtitles, music, and that one costs another 50 million. I do not know. I'm just assuming here. Then let's talk about um the cast, or no, lighting. Let's talk about the camera crew and all of that. Let's say all of this costs another 70 million, right? Right? I'm just throwing out numbers, remember. Then let's assume maybe miscellaneous that goes into, you know, producing that, another miscellaneous cost of, let's say, 30 million, right? Now, the total cost of this would be 100 plus 50, 150 plus 70, right? That is 220, right? Plus 30, that's 250, right? So let's assume it was 250 million. Assuming, right? So we are just assuming. So the cost of producing that movie, we bring it here and say 250. I think I need to put it to the side so that it aligns and it's easier for us to just do our example with all these assumptions. 250, 1, 2, 3, 1, 2, 3, right? Okay, so then the gross profit will be 1, 1, 1.150 billion, right? Let's assume these are all assumptions. Now, basically, it looks like this might be too low, right? So I don't know, but let's assume, let's throw it up. Let's assume this is 170, and let's assume this is 130. I'm just throwing this out there. So 170, 130 is already 300 plus 150. So that's 450. Let's change this to 450, because let's make it more realistic. So let's say it's 450, right? Then I'm just going to clean this out and say if it is 450, it means what we have left for gross profit is actually 950 million. Okay, good. Now let's come to the expenses. Those are the big buckets. You know how our biggest director and producer goes all out for marketing. Funke Akindele doesn't hold back when it comes to marketing, right? So let's throw in another assumption there. Let's say she spends on marketing, she spends, again, let's say another 250 million, right? Okay, so let's assume marketing 250 million. All right. Okay. Then merchandising, let's say 30 million for all those clothes. Just assuming, I don't know. Then distribution, this is going to be the big part because all the cinemas that it shows in would have their own costs, right? For every room that is being aired, it depends on the contract or the agreement. I don't know. But let's assume they take 20% of everything you sell. This might be way too low, but let's say 20%. So 20%, 10% of this is 14 million, 20% is 28 million. If we say 40%, right? 40%, if 50% of 1.4 is 700 grand, 700 million, I think that's a little too high. But let's keep it at 20. So 20% will be what? 10% of 1.4 billion is pretty much 140 million. So 20% will be 270 million. Let's say distribution costs 270 million, right? Now, with this, what do we have? 950 minus 250, that gives you 700 million, right? Then 700 million minus these two together is 300 million. 700 minus 300 leaves you with 400 million. So, yeah, 400 million. Okay. So, this pretty much is what Funke is left with to actually distribute to our investors and pretty much maybe ourselves. So, if you look at this example, we started from the 1.4 billion, which is the revenue that we all heard about. But based on like all of these assumptions that we threw in, they might just be going on with this, which is also huge. And I'm saying they might because we're just using this as a case study. And for your own educational purposes, it means that taxes can only be done on this amount. You can't tax anybody on their revenue. It is wrong. You tax people on the net profit. So if the net profit is being taxed, I'm just going to throw this out because I don't want to make this a tax class. Let's say it is 30%, then tax takes 30% of this, which would be another 120 million, right? And then what they will be left with will now actually be 280 million, right? Now, and I'm just using this. Okay. So basically, hope you understand. Now, again, just for shout out purposes, Fakekide is going again back to the cinemas on December 13th this year, and hopefully this number becomes 5 to 10 billion. See you again next class. Hope this is wonderful. Thanks and bye.